How's it going, guys? Luke here from LAGFX. Today we are bringing you another Sunday Sessions video. Before we jump into our analysis and before me and James go through what we are looking at for the coming week, I'm just going to run past a successful trade that we took at the start of last week where we captured 70 pips and made a lovely 6% returns on that trade. We feel this is a great way of showcasing our work and the analysis we've done, but also to provide you guys with a more insight on the steps it took for us to actually place the positions we placed. So without further ado, let's jump straight into the results of last week. So as you can see here, we did place a long position on Euro USD. If you remember our previous Sunday Sessions video, we did actually call this out and we did say that we wanted to basically take advantage of the next impulse up. Now, I was actually waiting for a break above this price here, but I did actually end up placing a position before that, as you can see, and I'm going to run through the reasons why. So as you can see here, the Euro US dollar pair was actually very bearish dominant, providing us with clear bearish structure. And we marked out this price and this level of demand as a point of interest, basically, an area to look out for. So we had the tap, which is what we were waiting for. That was great. And then we said that we were going to wait for a break of this point. Now, the reason why I took advantage of a buy position beforehand was a few reasons. Now, as data came in, it was becoming more and more evident that the bulls were now in control. So that was my first piece of confirmation that I wanted in order to look for a buy position on this pair. Now, my second piece of confirmation was basically the break of these lows and previous highs that it had generated during its bearish move. Now, this again tells us traders that the previous trend that was, in power is no longer in power as it's broken structure. Now, what really gave me the confirmation was actually using the Fibonacci retracement tool. So I marked my points A and B. So A being the start of the impulse, which was here, and then B being the end of the impulse here. So I was basically looking for an area at which price could retest to before taking its next impulse up. Now, if we mark A, so the start of the impulse, to B, the end of the impulse, you can see that we had a lovely tap and reaction off the 50.0 ratio. Now, some may say that my entry was a bit impulsive. I didn't really wait for as much confirmation, but I think that I had more than enough confirmation. We had a clear bearish trend here. It tapped into demand. The trend had clearly broken as it was breaking structure and breaking these previous lows and previous highs that it had been producing during this bearish trend. And then on top of that, we used the Fibonacci with this first impulse and we had a clear reaction off one of the golden ratios. And then I obviously waited for 4 hours. As you can see, this is on the 4-hour time frame. So this candle right here, we just move this out of the way. This 4-hour candle right here, obviously I waited for that to fill. And then once a new 4-hour candle started to form, that's exactly when I entered in. As soon as I saw a continuation in bullish strength, I entered in on this trade. Now, if we put this back, you can see we made a lovely 70 pips from this bullish impulse. Now, looking back at the trade, are there areas that I could improve on and are there things that I would have done differently? Yes, I would have set my take profit a bit higher. I would have taken it to this point that I was looking to break, as I believed that the price would break that point anyway, and I knew this was an area at which price would have to come to before any kind of real reversal or retracement. So yes, I would have increased my take profit, giving me a better RR. The 70 pips that I did make gave me a lovely 6% return, as I was risking 2% at 22 pips, and my take profit was 70 pips, giving me that 6% returns. Obviously, with 106 take profit, my risk to reward ratio would have actually been a 4.5 to 1, giving me a lovely 9% returns. But nevertheless, we profited from this trade and it was a brilliant trade. Now, other than moving my take profit higher, would I have done anything else? Now, I could have moved my stop loss a bit higher, making my stop loss a bit tighter, which in return would have increased my RR again. But I had reasons to set my stop loss where it was, as it was just below previous highs on the bearish move down, and it was also 12 pips away from the previous low. Now, when I look to trade clear trends, I like to keep my stop loss 8 to 12 pips away from previous lows or previous highs, just to give me that leeway and that added security when placing that trade. And obviously we take our RR into effect with that and still ensure that we are using a minimum of a 2 to 1 risk to reward ratio. Now again, like I do every week, what I'm going to do now is throw up the screenshots from the trade that we placed and the profits that we incurred, just to give you guys added confirmation and added evidence, basically. So now that we've gone over the trade that we did profit from last week, now we're going to jump into some analysis for the week coming and give you my thoughts on the market and let you know what I want to see this week. So the pair we're looking at here is the Great British Pound to Yen, and this is on the 1 day time frame. Now, as you can see, price has reached previous levels of demand, and this is considered a key level of demand as price has tapped into this point many a times and reacted to it, failing to break below. So we consider this a strong level of demand. Now, the point I've marked out here in red just indicates the most recent level of supply on the 1 day time frame. Now, straight away looking here, what am I wanting to see and what am I wanting the markets to do this week coming? Well, in all honesty, I am actually biased to a sell. I do believe that we are going to have a break below this level of demand. Now, I could be wrong, but I am wanting to see price break below this point. Now, why do I believe that price is going to break below this demand zone? Well, we can see that we had a large bullish rally here, and I believe that price has grabbed all remaining liquidity up at this point, and then it has now started its new bearish trend, giving us lovely lower lows and lower highs. Now, in order for me to really capitalize on this Forex pair, as I said, I will want a clear break below this point, and I'll probably wait for some kind of confirmation that price is going to then continue to fall down, whether that be a break and retest, which would look something like this, in which case I would look to enter once price reaches this point before falling. Or if we do just get a clean break below, I will wait for some kind of confirmation, whether it's a candlestick formation or added volume and strength to the bear's power, pushing and deviating price lower down. Now, obviously, the only other alternative is for price to, again, react to this point and then push higher, in which case I will wait for confirmation again, whether that be a fake out or just a clean reaction off this price and starting to produce nice bullish structure, in which case I will look to take advantage of a buy, and I'll look at setting my take profit around previous level of supply. Now, I know that's quite brief, but I don't like to overanalyze the markets as such. I just like to look at current market structure, the direction in which it's going in, finding a bias and any POIs that may be of interest to me, and then from there having some kind of goal and target in which I want price to reach. So, as I said, I am biased to a sell, and I will look for confirmation with either a break and retest, a clear break below, looking at volume and momentum, as well as strength to the bears, and if not, then I'll look for a fake out or a clear reaction from this demand zone and a push up, setting my take profit around here for a buy and keeping my stop loss as tight as possible, between 8 to 12 pips below previous lows that the market's produced. Now, if I was looking for a sell position, I'd probably want to set my stop loss within this demand zone somewhere here, just to give me that added security and ensuring that the stop loss is placed above previous highs. Now, again, I know it's not an exact set trade that I've given out, nor have I given you specific parameters. It's purely just an insight onto what I'm looking at and what I believe could happen. So for me, it's just going to be a case of being patient and waiting for price data to come through and wait for that opportunity to arise. Now, the second pair I'm looking at for the week commencing is XAU to USD. Now, my bias straight away is to a buy, and I will be looking at buy positions this coming week. Reason being, we've had a tap into demand here, and we've also had a break above this point. Now, when we go into lower time frames, you'll see more reason into why I'm biased to a buy. But just looking at the 1 day time frame, we can see a clear tap into demand and a lovely push up. Now, I believe price could ride 2 previous levels of demand, which are now acting as supply, before taking its next big dip down. So for me, it will be about looking at those buy opportunities this coming week, riding it up as much as possible to this point, and then taking advantage of a large swing coming down. Now, looking at the 4-hour time frame, it might be a bit easier to see the structure of the market, and you can see we've had a clear tap into demand here, and we've also now got a new break above previous levels of support. Now, I do consider this area as a level of support, just as price has failed to break below it so many times. Now, again, looking at the 1-hour time frame, we can see more evidently the failed breakouts below this level of support. But what really catches my interest is the most recent data that's come through on the XAU at USD. So after we had the tap into demand here, price started to create new bullish structure, giving us new higher highs and new higher lows. Now, this is something that has really caught my interest. As we have had a clear break through this point, price has then come back down and tested this area, and it has now produced us with a lovely green bullish candle. So I think gold's next move is to move up higher. Obviously, we will want a break above this blue line here. Again, another break above this blue line set here, as these just mark as areas of resistance. Now, our overall goal with this bullish move up is to get price up to the 1820 area before taking its next impulsive wave down. So as mentioned before, I am biased to a buy, and I will be looking at placing those buy positions once I can find a perfect entry. Now, Great British Pound to Japanese Yen and XAU to USD are the only 2 pairs that I am looking at the moment, just as I believe it's important to have a clear focus and not to have your eyes on too many pairs. So now that I've gone through my profits from the previous week, as well as the pairs that I am looking to capitalize on in the coming week, I'm now going to pass you on to James, our head analyst, and he's going to run through some of the things he's looking at for the coming week. Now, I hope you've enjoyed the analysis I've provided. Again, it is quite brief. That's just how I do things. I don't like to over-analyze the markets. I just look for those key points of interest, key structures in market, and the current trend, and any potential for reversals. If you have any questions regarding my analysis, drop a comment below. Alternatively, message us on Telegram or Instagram, and we will get back to you as soon as we can. Now, without further ado, I'm going to hand you over to James.
So thank you, Luke. Thanks for passing over to me. I hope you guys have all enjoyed the analysis he provided, as well as the updates. As you saw, we have both caught some pretty crazy trades as of the last trading week. The first market I'm going to be diving into is the gold market, just because this is another one of those markets that I managed to profit from. I'm just going to run through what I believe this market is doing longer term, and then we'll dive into the more shorter term, show you the trades that I took and the reasons behind them, as well as what I'm looking for in this next trading week in terms of positions. So first things first, everybody knows as of about 2 weeks ago, we saw price trade up to a long-term supply zone. We've been watching this one for quite a while now. We were expecting the reversal here. We had that delivered in the forms of a distribution on these higher time frames. Looking on the lower time frames though, we managed to see more fractally and see this mitigation, which was in itself a lower time frame distribution. Managed to get in on the entries, ride that down just as we expected. The reasoning for the take profit being at this level though was just this line here. If I zoom out, this line to any technical traders is a huge area of importance in the market. It has acted as support and resistance prior, and it's had many touches, which confirms its validity massively. So this was definitely a point of interest for me, not for the purpose of using it to trade from, but for the purpose of understanding the fact that this is likely to be manipulated in some way. So if I zoom in now, as price traded down, you'll see exactly how it's reacted to this line. It's found this line as support. It has showed the reversal and the continuance higher before more than likely liquidating those people out of the market. Now, even still, the people who were looking for buys off this level, they would have still been able to be in some profits depending on how they managed their trades, whether they had a smaller take profit or used the partial rule like we do. They would have been able to be successful off this move. However, it's just that reminder that it has still been liquidated, because we still understand that after it's reversed from this point, we have many stop losses at this level. So we have a high volume push down, but I'll jump into that now and show you exactly what I'm talking about. So here we have it. Price came down. We had that tap, that reversal exactly on that support line, which to me actually created a accumulation in the market. So it acted quite perfectly. It came down to this level, accumulated, and then gave us signs of that buy. Now, after price started to trade up, this was where it took quite a deciding moment, because for a lot of people, they have noticed a break of structure here. Now, to them, they're now thinking that buy positions are going to be valid. However, because we had done a top-down analysis prior, we knew that after tapping and reversing into the supply zone above this, where we managed to take this sell from, we knew that that was the longer-term point of interest that price had actually been bullish for previously. So it didn't really have many reasons. It didn't have much confluence telling us that price would want to now make any move higher. As a result, my bias still longer term was the fact that we were going to liquidate this level, continue lower. So as I say, yeah, we've shown this reversal. Price has continued to trade higher from this point. And the thing that I really like about this is the way that it trades back down. And if I extend this line over, you can see that once again, we have had that reversal. Now, anybody who is a technical trader knows how to trade technically. I used to be a technical trader, so to me, this is perfect. Price traded down, and then we have a bearish doji candle, a high volume straight after. To me, this perfectly says, okay, reversal. It's actually a higher low in the market after setting a new high. We can expect now the next higher high to be put in place. Let's get in on those buy positions. But straight after that, we have this heavy volume push down. Liquidates that point, liquidates all the people that were in on positions on this support or resistance level as of prior, as well as all the people that have been introduced into the market from the tap here. Now, even though this was more than likely off the back of economic news, the volatility that fundamentals economic news brings, it isn't just completely random in terms of where price is taken. It is going to add volatility that is unpredictable. However, it is typically still going to serve a purpose. So, of course, the purpose of this one was just clearing all the liquidity on the downside. From this point, we've then started creating bearish structure and creating selling opportunities, continuing in the market just as I thought we would from this start, from the higher time frame bias. So this market has actually been very nice to trade, I must admit. It is pretty much just creating supply zones, mitigating them, and then putting in that next leg lower. As you see, we had this tap. As you can see, when I was intraday trading throughout the last week, I managed to look for and catch some good sell positions. This one was a full take profit hit, as was this one. This one, we just ended up with a partial, and then we got stopped out at entry. So that is just one of the risk management tools we use. Once that partial's hit, we move that stop loss forward to the entry point. But I'll actually dive into now how we got in on these positions. So firstly, we'll focus on this area. I'll show you exactly how I managed to get the profit from this one, and also why I took the partial here. Okay, so the reasoning for these entries, first of all, I had this supply zone drawn out, pretty obvious. It's that last buy before the heavy sell-off, and as price liquidated this area that we were talking about before, liquidated that support level, it traded back up, and then we had this liquidity point built. We had many equal highs, we had that inducement, so this is exactly what I was looking for. We have that level of inducement, and then I thought to myself, right, what I'm expecting here is for price to come, liquidate this level, and then we can start trading lower. So that's exactly what it did. It came, it had that tap in here. It showed signs of the reversal before that high volume pushed through. and then it made its move lower, which is exactly what we were expecting. After that, I did the exact same thing, took this entire up move, so that high volume push up that caused the liquidation of this area of inducement. This was my point of interest moving forward. And once again, as I was saying, price came down, we accumulated down here, price traded back up, came into this zone, which I was of course waiting for with an alert. I was pinged, and then on the lower time frames, I found a distribution in there. So just to show you exactly what it is I'm talking about, this was a distribution I saw within the supply zone. So after seeing this, I got in on the last point of supply, hoping to write it down. And then as I stated, it did write down. We did manage to take that partial close. After we did, we moved the stop loss to entry. So at the point of partial, we took off half of our position at a 2.5 to 1. So that's about a 1.25 RR return. And then of course we were taking out the trade at entry. So we did still manage to get some profit returns. As I said, before any of this, a top-down analysis and a higher time frame bias would have been established. So we knew that price wanted to trade down, which is exactly why we are confident in taking the sells, and exactly why I knew that this level was more than likely to be liquidated, which, as I said, exactly why I was confident in the sells. We've managed to catch 3 as of last week, and right now I'm expecting price to hopefully react to this supply zone again and try and catch a sell position down. Of course, if we find entry confirmation, we'll be able to refine that stop loss to a structural high created within the reversal process, but it's a pretty obvious thing. We've set that lower low in the market, just hoping to set a lower high, protect this high, have a reversal, get a great sell position. So just look on open for any signs of reversal. I probably won't actually be looking at this until the Monday's London and New York session. So if it does happen overnight, unfortunately that is just something I will miss, but I don't have that fear of missing out. I don't trade outside of my own trading times just to try and catch a trade. You just need that discipline, that routine, stick to it, and longer term the profits will come. Okay, so I've come over to the US dollar, to the Japanese yen market now. The reasoning for this is because this was also a market that I enjoyed trading last week and found some good opportunities from it. So I saw this break of structure around the 26th of November, and after this, my bias instantly went over to being bearish moving forward. But now moving forward, I have identified this area of liquidity in the market. So this was definitely a level of inducement where price was slightly hesitant to really set those lower lows. It was really hesitant to make this push lower. And what this tells me is that it just struggles to introduce or have enough supply in the market to outweigh the demand enough to cause that movement lower. So when we do see this, and it was just really hesitant, it was failing to really put in a lower low, we're typically going to see price have some sort of liquidity clearance or some way of manipulating people out of the market to introduce more supply back in to continue with that move lower. Now, this is only the case when we are confident that price does want to make a move lower. And with this market, using the top-down analysis and the higher time frame bias we had already established, I was pretty confident that price was going to continue trading down. So, as I said, I've identified this level of liquidity and inducement level. We've come through and we've liquidated that. My suggestion for this market is highlight your last impulsive wave, which would be this for us right here. And then we need to go inside here and look for our supply zone. So to me, the first one that catches my eye is the area in here. However, if we zoom into this, we're also seeing this one here. So if you do remember in one of the last videos, I said that I do usually prefer to, not that this is the correct way of doing it, but I usually prefer to identify the most recent and the first supply zone. So the reason I identify the most recent one is because this, in the terms of the lower time frame and fractal structure, this is its protected high. Now, if it is to break this protected high, so its last structural high in the market, in the scheme of the fractal structure, if it was to break that, it is then going to confirm bullishness shorter term. Now, because it's showing its readiness to start liquidating the highs, it is much less likely that it liquidates one high and then makes its move lower. If it's showing its willingness, as I said, to liquidate the highs, it's probably going to do so for as many highs as possible because it has the purpose of coming back up and fulfilling this supply zone here before it's moved lower. So it would have liquidated all of the highs in the structure, all of these wicks that come back up. These are all points of liquidity. It manages to blow through all of these, clearing the liquidity, taking people out of the market, coming up to here and introducing a lot of supply to hopefully then continue with this downtrend. Okay, so that's going to wrap up my section. I hope you guys have enjoyed. I've run through the gold market and the US dollar to the Japanese yen currency pair. I've given you some zones to actually look to be a seller in. However, a quick disclaimer that what I'm saying isn't financial and investing advice. It's just my opinion, what these markets have told me through the use of my own analysis and my own strategy. Make sure that if you do want to act upon any of this information I've told you, make sure to implement your own analysis, your own strategy to it, to ensure that we have confluence and biases. If so, then look to make your own position. But to round it all up, thank you for watching, and we will see you guys next week in the next Sunday session video where we give you some more investing opportunities.